We start our portion with the latest release. Japan releasing its latest economic reading just over an hour ago. Numbers look impressive thus far, at least the headline. The world's third largest economy grew 3.5% in the first quarter compared with last quarter of last year. That is well above forecast compared to what the U.S. grew at an annualized rate of 2.5% during the same period. A multi-billion-dollar stimulus package and a weakening yen are seen as contributing factors for Japan's recent growth. For more on this number, I'm joined by Michael Czinkota, professor at Georgetown University's McDonough School of Business, professor of international business, and we have an international topic here. This headline number, let's start with that, 3.5% versus 2.7%, which was expectation. Should we feel optimistic about what Japan is doing?
Oh, I think it's very exciting because obviously for more than 10 years, Japan has had an enormous difficulty in terms of jump-starting the economy. And there were always, I think of it like a group of Boy Scouts who want to light a fire. And they do the traditional thing with the Flintstone and let's light the fire. And it just doesn't work. And the reason is because it was raining and everything is damp and wet. And whatever you do with the Flintstone doesn't do much.
And now?
And now we're seeing things are heating up, things are drying up, so to speak. And the whole issue has always been largely one of consumer perception, consumer desire, consumer willingness to spend. And that seems to be happening much more now.
Now, there has been some controversy here because part of the reason why the numbers are strong is because of the yen. The yen has been a little weaker, and that's caused some controversy because a lot of people think that perhaps the Bank of Japan is basically forcing the yen down, and that's helping all the export companies. How should we read that?
Oh, I agree with that perspective that the Bank of Japan has tried and successfully tried to lower the value of the yen. If we look at the past 6 months, the yen has dropped like a stone, basically. And that is good for Japanese exporters. On the other hand, the yen was very high. And it's very, very difficult to compete if your currency sort of prices you out of the market.
This stimulus package, they call it Abenomics. There's a lot of terms for it. The bottom line is there's been some money being printed. The yen is having an impact. But they're pumping money into the economy. And they've tried it before, and it didn't work. This time around, it seems to be working according to the headline numbers. Why?
Well, one reason is that the focus is not just on more money, but the focus is also on inflation, where in essence, for the first time in a long time, a government is saying, we are going to systematically try to encourage inflation. We are trying to get 2% plus.
Which is very odd because the rest of the world obviously doesn't want inflation. That's the danger, is the reverse of that, which is a deflationary environment where companies can't have pricing power. So is that sustainable, what they have right now?
Well, to my mind, the basic perspective is where the Japanese government is telling its citizens that if you have money, spend it or lose it. Because if you just have it sitting there, we're not going to pay you any interest. We're going to try to trigger an inflationary environment. And that means that any money you're saving or having under the mattress becomes worth less every month. And that, hopefully, from a Japanese perspective, will trigger consumers to go out, spend money, and do more things which help the economy grow.
What seems to be working, of course, the markets has been reading the tea leaves, and they've been on a tear. You know, for a lot of the consumers in Japan and investors, it's been a rough last couple of decades for them. And I guess the question is, you know, the next 2 or 3 years, does it look like what we saw today, these numbers?
Well, obviously, as they say, one swallow doesn't make a spring. But at the same time, you've got to have some initial first positive steps. And the reaction to Abenomics, as you call it, is a positive one in terms of what his government is trying to achieve. More spending, less holding back, more exports. And if that can be projected and continued over the next 6 to 8 to 12 months, then I think that can be a very strong engine to help the Japanese economy grow again.
Professor, it's great to have you on Biz Asia America, Professor of International Business at Georgetown University. Thank you very much.